Clubs and Societies, Sense Business Studies. Welcome back. Please subscribe to Sense Business Studies and like this video. Also, I have my own YouTube channel called Crazy at GCSE, so please go and subscribe there as well. Here I teach biology, maths, physics, ESL, business, economics, and accounting. So now let's get into the topic. So clubs and societies in this video will distinguish between the receipts and payments account and the income and expenditure accounts. We'll define and calculate the accumulated fund. So clubs and societies, these organizations provide services to members who subscribe to their services and the general public. They don't have a profit motive, and that's why they're called a non-profit organization. The main source of income is the income from the subscriptions. It's managed by a group of people called the managing committee. Treasurer is also known as the accountant of the clubs and society. The receipt and payment account is prepared in place of a cash book. Income and expenditure account is prepared in place of the income statement, and surplus is in place of the net profit, and deficit is the place of the net loss. In a non-profit organization, there is no investment or capital as there is no owner in this organization. The accumulated fund is instead of financed by in the balance sheet, and it is a surplus amount of previous years. It is calculated by the current assets minus the current liabilities. Then the receipt and payment account is like the cash book of a trader. It records the receipt and payment account. It has amounts of the previous, current, and following years. It calculates the cash in hand and bank of the club. Income and expenditure account contains the revenue receipt and revenue payment. It considers amounts for the current year only, and it has adjustments of the outstanding and prepaid. It calculates the surplus or deficit for a year. Then you need to know that the purchase of equipment is not an expense, so it is a capital expenditure. That's why it is in the balance sheet. The depreciation is calculated in the income and expenditure account. In the income and expenditure account, we start from the income and don't record the parts from the gross profit, which includes the inventory purchases. Loan from a member is not recorded as it is a liability. That's why it is not recorded in the receipt. Surplus is added with the accumulated fund in balance sheet, and the deficit is deducted from the accumulated fund in the balance sheet. Bank in the subscription account is the subscription received, and the shop sales don't go in the income and expenditure account, it goes in the receipt and payment account. The purpose of creating a receipt and payment account is to find the bank balance, and the purpose of preparing an income and expenditure account is to find the surplus or deficit for a year. We deduct or add that surplus or deficit from the accumulated fund in the balance sheet. Adjustments are made in the income and expenditure account only, and the receipt and payment account does not include any adjustment. Thank you for watching. Please do subscribe, like, and comment down below. I'll be making another video on solving past paper questions on this topic.